Good afternoon, this is Stewart Solaka with Chicagostock Trading here at the studios of MrTopStep. And today we're going to do a quick update before tomorrow's FOMC. We've had two in the past that have been pretty significant. And we'll take a quick look at the Nasdaq chart because the majority of this move began in July when we had July earlier in the month attempt a breakdown only to turn into a head fake, rally into making new highs where it hit 46.60, which was a level we put out back in May as a sell level. That was rejected. We got to move below the July lows, which set up a reversal that gave way for the flush to retest the lows from last October. So we saw a squeeze back to retesting the lows in July on the last FOMC that was done last September. That failed to hold up there and it trapped buyers above that level. That gave way for another retest of the August lows. We saw the market flush down to squeeze out the longs, lure in shorts, and then reverse back up, make a V-bottom, squeezing out the shorts. So after the longs got kicked out, after the shorts got squeezed out, now it was at a time to kind of hold and try to plateau and force everybody to try to chase. And that's what we've seen. This V-bottom, we've seen it expand. If we take that range, we add it to the upside, it's giving us that target of 45.90, which has squeezed out the short side once again and also forced buyers who got kicked out on the way down to have to chase after on the way up above this V-bottom here, and that's what's given room to expand this back. And now where we've come to is back to testing the FOMC that led to the move down back in August. So at this point, this would be a time to take a little bit of caution, not to chase after the market at these highs. This was the objective from that V-bottom that we see back that was set up in September and October. So this is a time where the market is going to want to consolidate and see if it can continue another leg higher, because we are seeing a little bit of profit taking at these levels. For any type of reversal, we'll have to take out last week's lows. We'll take a look at the S&P in the next chart. In the S&P, we had similar setup where last month's FOMC rejected at 2012. We had buyers fail to hold the market above 1980. That turned into a bull trap and it gave way for the move into 1870. So if you're following the charts that I post up on Twitter, you'll see how we've kind of tracked all this activity in the Nasdaq and in the S&P. When the S&P completed its objective at 1870, that turned into a bear trap because the following day we saw the market open above 1870 and it gave room to squeeze higher. Once we recovered 1950, it gave way to retest that 1980 level, which was where the buyers got caught last time, and we set up another V-bottom. Now, the past 2 weeks, we had two bear traps set up, 1982 and last week 2007.50. So these bear traps, one of the reasons last Thursday's move up was so powerful was everybody was caught off guard on Thursday. We had that outside day reversal that everybody came in trying to sell, and that was one of the hardest trades, is not to take that short because there was a potential to set up for that bear trap. And sure enough, on Thursday, the cash market opened above 2020, keeping shorts below that trap, and it used them as fuel to move into 2070. So what's 2070s right now? 2070s is the retest of major resistance as well as a gap fill from August 19th FOMC high of 2093.50 in the S&P, which is what started this move down. So here we are 2 months later into the next FOMC, right back at where we fell in August, and we've tested this major resistance at 72. Already we've seen a little bit of profit taking. The market has at least paid shorts or aggressive sellers that are defending 2071 times as we've pulled back into 2050. Today we saw the market hold Friday's low at 53.25. It took it out, clipped stops below that, but it held and we recovered to close above 60. So what to look for tomorrow is if today's breach of 2060 becomes a trap and trap shorts at these lows to give buyers the fuel to try to run after 2070 again and after 2093. On the flip side, a cash open below today's lows would be negative in order to give room to try to retrace back lower. So if we look at the chart, the previous one, once again, on the daily chart, if we look at the last two major actions happened during the FOMC on the ES daily, if you can switch that back to the ES, we'll see in September we had the FOMC was a significant day as well as in August. So tomorrow will be another significant day. Will this be another day that the market tops out, or we can see the market expand? So we are waiting for that next direction from tomorrow's statement. And it's set up right back to where we fell at that 2070 level. So if we look at the next slide, it's the 60-minute cash. This will show us the The trap that we saw in September with the upside down V, that gave way for the move down into 1870. Now when we talk about these traps, these are what fuel the market and give it room to move in a direction. If everybody's long the market, who else is left to buy it? That's why if everybody's long, this is what gives selling pressure, because that's more people have to sell the market than have to buy it. So it sets up these traps and it gives fuel to move higher. And what we've seen over the past 2 weeks, that's what's fueled this kind of squeeze higher. Is we had a couple of traps. We had one right over here into that 1982, and then last week again, where we had that flat top at 2030, we breached down to 2007, which was a 61.8% retracement of the prior week's breakout. And following cash open above 2020, leaving shorts below 2020 stuck, and that gave the fuel and room for buyers to try to squeeze higher, and the buying pressure to get through 2030 into 2070s. So we've into 2070s. We can see this chart is traced right into that major resistance from the FOMC back at 2093.5. I've already seen a 20-handle pullback retracement, consolidation, and profit taking. At this point, we fill the gap down to 2052. First major support now comes in. All the resistance was 46. That comes in as first level of support down to 34. Sell stops will be seen below that low last Wednesday at 2007.50. So any reversal below 2007.50 will confirm a failed breakout at this level, and it'll leave buyers above 2030 caught holding the bag. So if you want to hold that pullbacks down to 2030, that gives an area for buyers to defend. On the upside, the next level of stops is going to be above 77.75. It gives room into testing 90, and then that FOMC high of 93.5. So until then, we'll keep eye on this cash chart. We'll take a look at today. We had a slight dip. Today we had the cash market open below the 2-day trading low of 56.75, and that's what gave kind of a choppy trade today, because buyers were stuck above, and it gave room for sellers to try to press down and test downside levels. So we did see a move down into the low 50s and then a recovery back into 60s. So this could be a potential trap where sellers got a little bit paid and also lured in some new shorts. Going to tomorrow, we'll see if the market opens above the last hour high from today to give room for buyers to try another shot at 2070s and target that 2093 high. On the flip side, if we fail to hold 46, we have room down to 34, and the gap fill at 18 with sell stops below 07.50 to reverse this upside breakout attempt or breakout and completion. So until then, I'll see you guys next time. Have a good one.